Here are the crypto top headlines covered in this video. Anthony Scaramucci says latest Bitcoin correction fueled by Grayscale GBTC sell-off. Next, what crypto supporters should focus on during Davos 2024. Also, Vanguard blocks Bitcoin futures offerings as financial giant distances from crypto. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Anthony Scaramucci says latest Bitcoin correction fueled by Grayscale GBTC sell-off. Skybridge Capital founder Anthony Scaramucci says that Bitcoin's recent correction is likely due to investors selling off their holdings in Grayscale Bitcoin Trust, or GBTC. Shares of GBTC were converted from a trust into an exchange-traded fund after receiving approval from the U.S. Securities and Exchange Commission last week. Scaramucci says that his trading desk reported that GBTC holders booked losses on their shares in order to hold ETFs with lower fees, Bloomberg reports. There seems to be a lot of selling of Grayscale. The hedge fund manager also says that the estate of former crypto exchange FTX, which went bankrupt after a dramatic collapse in late 2022, took the opportunity to sell off its holdings during the hype of the Bitcoin ETF approval. Although BTC has been selling off in the last few days, Scaramucci thinks that the situation will change in about a week's time. The second thing we are seeing is the bankruptcy estate of FTX is unloading into the ETF announcement. There is a heavy volume of selling in Bitcoin right now. I do expect the supply overhang to be done in the next 6 to 8 trading days. One last thing, there has been a quiet period for Wall Street. Wall Street has not been able to market these ETFs, and that will start in about 8 days as well. At time of writing, Bitcoin is trading for $43,039. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, what crypto supporters should focus on during Davos 2024. As the world's economic, political, and social elite gather in Davos, Switzerland for the annual World Economic Forum meeting, the landscape for crypto continues to look murky. To put it mildly, crypto and crypto advocates have had a tumultuous last 12 to 18 months, with crypto reaching all-time highs, new products and services launching, and increased mainstream awareness of the ecosystem at large. On top of these bigger picture trends, the rapid pivot of institutions into blockchain and crypto asset applications have led to renewed optimism associated with mainstream adoption. This is not even touching on the momentous approval of multiple spot Bitcoin ETFs to start trading in the US. On the other hand, crypto assets as an asset class and outside of the institutional setting are still recovering for what can best be described as a brutal year for the reputation and trust of the sector. From billions lost in scams, the collapse of FTX, and guilty verdict of Samuel Bankman-Fried, as well as billion-dollar fines levied against Binance, investors are right to have trust and confidence issues in the space. It is even reasonable to state that given the multitude of faults that have occurred in the sector, that crypto needs to renew the trust, transparency, and confidence that investors and advocates once put forward as leading reasons for adoption. The theme of Davos 2024 is rebuilding trust, so let's take a look at how the crypto industry can continue to do just that. Make the most of ETF momentum. After years of advocacy from the crypto space and stonewalling by the SEC, the recent announcement that all 11 of the recently submitted ETF applications were approved for trading in the U.S. markets is certainly news worth celebrating. Setting aside the disappointment of some of the more ardent Bitcoin-only advocates who forecasted dramatic increases in price from the first day of trading, this action cements Bitcoin as an institutionally recognized asset class. As tempting as it might be to take a pause and reflect on this progress, the reality is that this progress is only the first step of many. Bitcoin and crypto assets more broadly are still dogged by statements decrying the fraud and lack of trust in the space. This includes statements by SEC Chairperson Gary Gensler in the lead-up to the launch of the ETF products and are indicative of the issues that the sector still faces. For crypto advocates and supporters, now is not the time to push for higher prices, to celebrate to the moon, discussions, or any other activity that could be construed as overly reckless or speculative. Rather, and building on some of the efforts supported by Coinbase and others, efforts should focus on improving relationship with regulators, building products that have a sustainable use case, and educating the wider investor community. Focus on clear and transparent reporting. Building on the first point, arguably the most important area that crypto firms, investors, and advocates should focus on is improving both the quality and quantity of reporting for crypto organizations. With 75% of Americans having low or no trust in crypto assets, this is an issue that must be addressed if more widespread adoption of crypto assets will occur. Pointedly, some of the failures that unfortunately made crypto a topic of everyday and household conversation, namely FTX, were exacerbated by a breakdown in the reporting of data and the audits of financial data that were reported. This is not to say that reporting in of itself will address any of the underlying issues that continue to exist in the crypto asset space. Fraudsters and poorly run organizations will always exist in any industry. Rather, and this is a point that seems to be coming more to the forefront for advocates and investors alike, crypto projects and organizations need to emphasize transparency in every step of the project. Transparency can take the form of financial statement audits, more clarity around reserve assets, or more information being provided around the management team of the project in question. Regardless of the specific interpretation, however, transparency and communication are imperative for crypto in 2024. Continue educating the marketplace. One of the largest, if not the single largest, issues that continues to trip up both the rulemaking process and the sentiment of investors at large is the information asymmetry that continues to exist in the marketplace. For investors and developers that have been involved in crypto for years, the array of terminology and jargon can seem secondhand, but for more recent entrants to the space or other non-experts, the terminology can resemble an incomprehensible word salad. Hot wallets, multi-signature authorization, hashing, mining, staking, decentralized exchanges, non-fungible tokens, layer 2 applications, and other terminology can not only make crypto seem confusing to investors, but creates gaps in understanding that unethical actors can take advantage of. Educating policymakers is only part of this conversation, albeit an important one, but the educational efforts from the sector must go beyond just discussions with regulators. Crypto applications need better user experiences, and these applications must be understandable and usable by a wide range of users, not just crypto natives. 2024 is setting up to be a pivotal year for crypto assets and the organizations in the space. Building on the theme of Davos 2024, Rebuilding Trust, crypto advocates can do a lot to move the sector forward. Our next top headline, Vanguard blocks Bitcoin futures offerings as financial giant distances from crypto. Asset management titan Vanguard is further distancing itself from crypto after the launch of spot Bitcoin exchange-traded funds in the U.S. The Pennsylvania-based firm, now says both spot and futures Bitcoin ETFs will not be available on its platform, even though other asset managers are rushing to offer their clients the new products, says a Vanguard spokesperson to Axios. In addition to spot Bitcoin ETFs not being available for purchase on the Vanguard platform, effective immediately, Vanguard will no longer accept the purchase of cryptocurrency products, including Bitcoin futures ETFs. On Wednesday, the U.S. Securities and Exchange Commission approved the spot market Bitcoin ETF applications BlackRock, Fidelity, Grayscale, Van Eck, Bitwise, Franklin, Valkyrie, Hashdex, ARK Invest, WisdomTree, and Invesco Galaxy. But Vanguard did not jump on the Bitcoin ETF bandwagon. The Vanguard representative says the decision to stay away from crypto is in alignment with the needs of its customers. This change allows us to focus on offering a core set of products and services consistent with our commitment to serve the needs of long-term investors. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.